Now, one of the guests you can catch right here on Bloomberg today is Birinyi. He will be our guest at 7 a.m. Birinyi remains bullish on stocks, and one of the big reasons is market breadth. Let's go now to our markets desk and check in with John Ehrlichman for more on the breadth in the market. John?
Yeah, absolutely, Scarlett. And Tom Keene and Ken Pruitt on Bloomberg Surveillance will be talking to Birinyi later this morning. Birinyi's year-end target remains 1,050, so he still sees upside for the S&P to the tune of about 2% at a time when a lot of people are wondering whether stocks have climbed as much as they can for now. But you're right about market breadth, that advancers versus decliners, that you're seeing an improvement from that perspective. Let's talk about the S&P 500. It's a market cap weighted index, which means if you look at names like Exxon or Microsoft or JP Morgan, because of their massive market caps, their influence within the S&P is greater than, say, a name like the New York Times, which is at the bottom of that list. But if you were to take an equal weight version of the S&P, that is, give every stock of those 500 stocks an equal weighting, what we can tell you is that that version of the S&P is outperforming the S&P itself. We put it on a chart for you. If you go back to March, they were tracking pretty closely together, but currently you've got this equal weight version of the S&P outperforming the S&P overall. And what that tells strategists like Birinyi and Mike O'Rourke of BTIG is if you've had a whole host of stocks in your portfolio, then you've likely been outperforming the S&P overall. And if you're a money manager that's looking at this kind of development, you're saying, well, if I stick with this strategy, i.e., hold the stocks that I've been holding rather than sell stocks after the run-up that we've got, there's a good chance that we can continue to outperform the S&P itself. It's these types of indicators which leave some still pretty bullish on the market, including Birinyi. Scarlett?
Thanks so much, John Ehrlichman. A warning today from Roubini, the NYU professor who predicted the subprime crisis, says he thinks the chances of a double-dip recession are increasing. That, according to a commentary he wrote in today's Financial Times. Roubini says the global economy will bottom out later this year, but that once governments begin their exit strategies, they risk a new crisis. He says attempting to cut large deficits through tax hikes or spending cuts could result in another recession with deflation. However, maintaining those budget deficits could lead to a rise in borrowing rates and inflation, leading to stagflation. Roubini predicts that growth will be anemic for at least a couple of years.